If you're a millennial who feels like homeownership is slipping further away every year, you're not alone. Today, I'm talking to the generation caught between sky-high home prices and the deep-seated desire for a place to call your own. A new Real Estate Witch report shows only 21% of millennials believe they can afford a home in 2025. That's down from 52% in 2024. Let's be real. The game has changed dramatically since our parents bought their first homes. Many millennials are now in their 30s and early 40s, traditionally prime home buying years, yet we're facing unprecedented challenges. But here's the interesting part. Despite these obstacles, millennials aren't giving up. They're getting creative, making compromises, and reshaping what homeownership looks like. Let me break down what's happening and what it means for you. The numbers don't lie, and they're telling a pretty stark story. According to recent research, home prices have increased nearly 50% since 2019, while wages have only grown about 15% during the same period. The median home price in America is now hovering around $430,000. That's more than 6 times the median millennial household income of roughly $70,000. Traditional financial wisdom says your home should cost about 3 times your annual income. So we're looking at a gap that's twice what it should be. And here's another eye-opening stat. In 1980, it took the average American about 5 years to save for a 20% down payment. Today, it's closer to 14 years. That's almost triple the time. And it's not just about home prices. The cost of living, everything from groceries to gas, keeps eating into what people can save for a home. So what are millennials doing about it? Well, they're getting resourceful. So what's exactly standing in the way? Let's get specific. The first and most obvious barrier is the down payment. With the median home price at $430,000, a traditional 20% down payment would be $86,000. That's more than most millennials have in their entire savings account. The second barrier is qualifying for a mortgage. Even if you have a down payment, lenders are scrutinizing applications more carefully than ever. They're looking at debt-to-income ratios, credit scores, and employment history with a magnifying glass. Recent research from Real Estate Witch shows that 67% of millennials cite student loan debt as a major obstacle to homeownership. The average millennial carries about $38,000 in student loans. That's a monthly payment eating into what could be going toward a mortgage. And then there's the competition. In desirable markets, homes are still receiving multiple offers. We're seeing that here in Phoenix, often from investors or older buyers with more substantial cash reserves. When you're competing against all cash offers, it can feel like bringing a knife to a gunfight. There's also this unique generational pressure millennials face. We grew up being told home ownership was the cornerstone of financial stability and the American dream. Our parents and grandparents often measure success by whether we own property. At the same time, we're the first generation expected to do worse financially than our parents. We graduated into recessions, faced stagnant wages, and now we're dealing with inflation eating away at whatever savings we happen to manage to accumulate. There's also a psychological toll here. A recent survey found that 71% of millennials experience anxiety or depression related to their housing situation. So that's not just financial stress, it's impacting mental health. And yet, despite all of these challenges, 80% of millennials still say home ownership remains a key life goal. That desire hasn't diminished, just the path to getting there has become much more complicated. This is where things get interesting. Facing these obstacles, millennials aren't just throwing in the towel, they're getting remarkably creative. According to the latest Real Estate Witch report, the lengths millennials are willing to go for homeownership are pretty shocking. Let me share some eye-opening statistics. 57% of millennials are willing to buy a fixer-upper to enter the housing market. That's a huge shift from previous generations who often expected move-in ready homes. 41%, and this one surprised me, would consider buying a home with asbestos or pests. Think about that for a second. These are serious health hazards we're talking about. Asbestos is linked to respiratory diseases and certain cancers, while pest infestations can cause structural damage and health issues. Yet, nearly half of millennials are willing to take one of these significant risks just to get their foot in the door of homeownership. That's not just a financial compromise, it's potentially putting health and safety on the line for the chance to build equity. Nearly 65% are looking at locations they wouldn't have considered before, moving to suburban or rural areas, or even relocating to entirely different states where housing costs are lower. The remote work revolution has really made this possible for many. Now, here's one that made me laugh. More millennials would prefer homes near cemeteries, 34%, or railroad tracks, 26%, than near their ex, 25%. I can't blame them, and a whopping 60% are actively avoiding homes near their in-laws. Family dinners are one thing, but daily drop-ins, that's apparently a deal breaker. Beyond these compromises, we're starting to see creative approaches to financing and ownership models too. About 31% of millennials are purchasing homes with friends, siblings, or other family members to split the cost. We're also witnessing the rise of the platonic life partner homeowner, people who aren't romantically involved but are financially committed to home ownership together. And here's a fascinating trend. 42% of millennial homebuyers are house hacking, purchasing multiple unit properties where they live in one unit and rent out the others to help cover the mortgage. This strategy has actually become so popular that specialized mortgage products are now being developed just for house hackers. Some are even more creative. 22% are living in ADUs, or accessory dwelling units, or tiny homes on family properties while saving for their own place. Others are negotiating rent-to-own agreements with landlords. Now, 9% would create a GoFundMe account to raise money for their down payment. Yes, you heard that right. Crowdfunding a down payment is now a thing. Move over medical expenses and charity fundraisers make room for Help Dave and Sarah Buy Their Starter Home campaigns. Imagine scrolling through social media and seeing your college roommate asking for $60,000 for their down payment right next to someone's fundraiser for a life-saving surgery. It would be funny if it wasn't such a clear sign of how desperate the situation has come. For just the price of a coffee a day, you too can help a millennial escape their rental type of situation. But all joking aside, the point is millennials are rewriting the rules of home ownership to fit today's reality, and they're willing to make sacrifices that previous generations simply didn't have to consider. Before we continue, I want to make sure that you have the tools to navigate this challenging market. I've created a comprehensive Don't Be House Poor workbook that walks you through calculating exactly how much house you can truly afford and not just what a lender will approve you for. So it includes budget templates, saving strategies to get you financially ready for homeownership without sacrificing your quality of life. The link for this download is in the description below, and grab it now and let's keep going. Now let's talk about a significant disconnect happening with millennial homebuyers. According to the research from Real Estate Witch, there is a substantial gap between perception and reality when it comes to down payment readiness. The study found that 68% of millennials believe they'll be able to put down 20% on the first home, but in reality, only about 27% actually manage to do so. The average first-time millennial buyer is putting down closer to 7 to 8%. This isn't necessarily bad news. Many don't realize that there are numerous loan programs designed specifically for first-time homebuyers that require much less than 20% down. FHA loans can go as low as 3.5%, and some conventional loans are available with just 3% down. However, there is an important trade-off to understand. Lower down payments mean higher monthly payments and usually require private mortgage insurance or PMI until you reach 20% equity. That can add hundreds to your monthly payment. This is where having a clear-eyed view of your finances becomes crucial. And it's not just about getting into a home, it's also about being able to afford and stay in it comfortably. Let's talk about interest rates, which have been on a wild ride recently. After hitting historic lows during the pandemic, rates jumped to nearly 8% in late 2023 before settling back down to around 6.5% where we are now in 2025. This fluctuation has created an interesting psychological effect. Many millennials remember seeing those sub 3% rates and feel like they've missed the boat. There's this sentiment that anything above 4% is too high. But here's some perspective. Historically, the average mortgage rate over the past 50 years is actually closer to 7%. What we're seeing now isn't abnormally high. What we saw in 2020 and 2021 was abnormally low. This matters because interest rate hesitation is keeping many potential buyers on the sidelines. According to recent surveys, 54% of millennials say they're waiting for rates to drop before buying. The challenge is that while they're waiting, prices in many markets continue to rise, effectively canceling out any benefit they might get from a slightly lower rate in the future. Remember, you can always refinance when rates drop if that makes sense, but you can't go back in time and buy at today's prices. Now, here's something we need to talk about candidly. According to a comprehensive survey by Clever Real Estate, a striking 82% of millennial homeowners report having at least one significant regret about their home purchase. The top regret? About 41% say their home requires too much maintenance. 40% feel their mortgage payment is too high, and 33% believe they overpaid. Now, this doesn't mean that homeownership is a bad idea, but it does highlight the importance of going in with eyes wide open. Many millennial buyers eager to finally get into the market rush the process or stretch their budgets too thin. The most common financial mistake is underestimating the total cost of homeownership. Beyond the mortgage, there are property taxes, insurance, utilities, maintenance, repairs, and potentially HOA fees. These can add 30 to 50% on top of your base mortgage payment. This is precisely why I created the Don't Be House Poor workbook to help you avoid becoming part of this regret statistic. Speaking of which, if you haven't downloaded the workbook yet, now is the perfect time. The Don't Be House Poor guide also includes a comprehensive checklist of all of the homeownership costs, including those easily overlooked expenses that many first-time homebuyers, it kind of catches them by surprise. So the link is in the description. Go ahead and download it now. It's completely free, and it might just save you from becoming part of that 82% with regrets. So where does all of this leave us? Yes, the path to homeownership for millennials in 2025 is challenging, but it's far from impossible. The key is to be strategic, informed, and willing to think outside of the traditional home buying box. Maybe your first home isn't your forever home. Secret, it's not. Maybe it's not in your dream location. Maybe it needs some work. But getting your foot in the door of the housing market, even if it's not the perfect door, is often better than waiting for conditions that, unfortunately, might never arrive. The most successful millennial homebuyers I work with have three things in common. They're crystal clear on what they can actually afford, not what the lender tells them they qualify for. They're flexible on location, condition, and type of property. And they understand that building wealth through real estate really is a marathon and it's not a sprint. So whatever path that you choose, make sure that it aligns with your actual financial situation and lifestyle, and not what social media or family pressures are telling you that you should be doing. As always, I'd love to hear your thoughts. Are you a millennial trying to buy a home? What creative strategies are you using? Go ahead and drop a comment below and let's have a conversation. And if you'd like to learn more about the best up-and-coming markets for first-time home buyers, be sure to watch this video right here. I break down the top 15 affordable markets with strong appreciation of potential and are perfect for millennial buyers. Until next time.